So we're going live with Money Talks. Money Talks is a weekly Facebook Live that we will be hosting. Myself, Rick Mathis, Antoine, or we have another gentleman that will be hosting with us as well, Kai. So, yeah, money. That's what Money Talks Live is. So, we'll be going live talking about money and allowing people to chime in and ask questions about money, talking about current events, things of that nature. So we're about to go live with it. Myself, Rick Mathis, Antoine, or we have Kai Harvin on the Facebook as well, who's watching. So you can chime in and ask different questions about money, about finances and all of that good stuff. So that's what we will be doing here on Money Talks, man, talking about money. A lot of people, I see my man uh, Brian just chimed in. Brian Jabet, what's up, homie? So we about to bring, okay, there we go. We're about to bring Antoine on. There we go, right there. Bring in on the camera. And we're going to get started, man. Get started with this. I'm so, excited about it. Antoine, you there?
Yes, sir.
Good, good, man. So, like I said, this is our first edition, first installment, first webisode of Money Talks Live. So myself, Antoine Orr, as well as Kai Harvin, who we'll be bringing in too. We're going to talk about money, man. Allow people to ask questions about money, and really get to the nuts and bolts of the issues and things that are going on with our finances. So the first thing that we want to talk about is pretty much just current events, like what's going on in the world of finance. Antoine Orr keeps his finger on the pulse of things that are going on with finances. So, talk to him a little bit about that, some of the things that you've seen in the news recently.
Hello, family. Glad you are joining us today. This is going to be an exciting time for all of us. It's going to be a great place for you to come and learn about money, how to grow wealth, and how to sustain that wealth, how to do it without the risk and without the high fees. Just a very simple way to make your life a lot easier. So, as it relates to what's happening right now in our economy, we heard what happened yesterday and on Friday with the stock market dropping. Um, you know, yes, it dropped. And what's so odd about that is that it dropped on good numbers, meaning the economy is strong, the labor force is strong. Um, but here's the problem: when the employee is getting a higher raise, making more money, that means that the corporations have to pay out more money, which means that the shareholders are going to get less money. So what may be good for Main Street may not be good for Wall Street. So that's number one. And sometimes we see where the market on bad news goes up. That happens as well. So, and there's a whole reason behind that. At the end of the day, there's no rhyme nor reason, but I can tell you at some point how the stock market works so you'll understand that better. But the key is to make sure that you have a plan in place that no matter who's in office, or what happens in the stock market, that you're still okay. And that's what you will learn as you tune in over time with Rick and I and Kaya, how to do that.
Good, good. So Antoine, so tell the people a little bit about yourself, man. Like what qualifies you, to come on here, come on Facebook Live and give this information, allow people to, ask you questions, via the live chat. We'll be taking questions and we'll be dialoguing, with people about different things that they issues and things like that. So what qualifies you, to give these strong and valid answers?
Well, number one, I'm a registered investment advisor. I run a registered investment advisor firm. I've been in the business for 25 years. I've worked with a number of the regional brokerage firms. Um, and I used to write for the Washington Post as one of their Ask the Expert contributors. I have spoken at Johns Hopkins University to the MBA students on finance. Wrote my first book back in 2008 called Inside the Huddle. So I'm still a licensed investment representative. I'm classified as a forensic investment analyst. And what that simply means in layman's terms is that I do the cost benefit analysis, risk management assessment, contract review, fee feasibility studies of my clients' investment portfolios, annuity portfolios, and insurance portfolios. So in a nutshell, that's what qualifies me.
Good, good. Okay. So we're actually gonna get into some of the questions. We want some of the people that are on here to share the live link to invite some of their friends on because I mean, Antoine generally charges a lot of money, for people to take up his time and ask him about finances. So we want to make sure that, we have enough people online. We have people that are online that are sharing the link, that are inviting their friends who may, hey, have a question about, their 401k, who may have a question about their insurance, who may have a question about their Roth IRA, or who may just have, $10,000 on the mattress and say, hey, Antoine, where should I put this money, man? Where's the best place for me to put this 10 grand, that I have now? If I have that 10 grand, where would you put that money, right now, if you had 10 grand that you wanted to invest in something?
Well, the first thing I would do is invest in myself. Learn the rules of the money game. Take the time to understand what makes compound interest work, how that works. Understand the difference between investing and saving. Oftentimes clients will say, I'm saving for retirement, but they're really investing for retirement. And the reason for that is because a savings vehicle is where your money is guaranteed, the principal cannot be lost. An investment vehicle is the exact opposite. Your money is not guaranteed, it's not protected, and it can be lost. So when you have a 401k plan, you are investing for retirement. You are not saving for retirement. And that's not semantics, by the way. You can actually find those definitions about that in the Securities Exchange Commission's library. They break that down for you there as well.
Good, good. Now, Sonia Price says she has a question. She said, Bitcoin versus gold, which is better, short-term investment?
Bitcoin versus gold. Well, gold, long-term, gold is a physical asset. Me personally, I would want to have gold. That's just my that's just my preference. Physically own the gold, have it in hand.
Exactly.
That has never gone out of style. That will
Hey,
always be.
I'm with you, Antoine. I like to have my investment. I like for it to be tangible, something that I can hold in my hand, and I know I have it. I know with Bitcoin, it's just pie in the sky. It's digital money, digital currency. You know what I mean? So I'm with you on that, man. Sonia Price, what about you? I mean, I know you probably got some money in Bitcoin. You probably got some money invested in gold. Like, what's your take on it? Or do you want to take some of that Bitcoin money and now go buy some gold with it? But me personally, that's what I would say, gold in hand. I would get the
And
gold bullions any day over a block of Bitcoin. And some
yeah,
people may say, Rick, you need to get on with the blockchain, man, da da da. Nah, I get on with it. I take some money and put it in and see what it does, but you know what I'm saying?
and Sonia asked a very good question because
Mm-hmm.
what's behind her question is how much money can I afford to lose? And whenever you're investing money, that should be the number one risk tolerance question that you ask
Mm-hmm.
yourself is, can I afford to lose this money? And if the answer is yes, then knock yourself out. Go for it. But if you
Mm-hmm.
cannot afford to lose it, then you really need to look at placing that money in other places that are going to be better useful for you.
Good, good. I see my man High Key just joined in. Sonia Price said, yeah, I'm skeptical about Bitcoin, but interested. I would say this to you, Sonia, like do more homework on the platform that Bitcoin sits on, which is blockchain, as opposed to Bitcoin itself. I had a meeting with some guys the other night, and it's going to be some very interesting things, to say the least, that's going to go on in the future with blockchain. And if you're not familiar with that term, definitely look it up, find out what it is. I know we have a kids money book coming out this week, and we talk about it in there. You know what I'm saying? But that's what you want to do. You want to find out what this is. How can you invest in it? How can you be a part of what's coming down the pipeline? I don't know if you're how versed you are on the whole blockchain concept, Antoine. But if you can tell the people about it, enlighten them on what blockchain really is and how it's going to affect our finances.
Well, I kind of take the Warren Buffett approach. I
Hmm.
don't invest in anything that I don't understand. Um,
Exactly.
that's the bottom line. If I cannot figure out how a company is making money, how the investment is making money, I'm not doing it. There has to be 1 + 1 = 2. I have to be able to follow the money. And if at the end of the day, it's just a bunch of hype, um, then I'm not really, what's the underlying asset? What's the underlying instrument? How do you even value what cryptocurrencies are really worth? Who sets that market for that? How is that even valued from a capitalization standpoint? That's why you see a lot of these big banks saying we are not going to allow Bitcoin to be sold on our platforms because there's just no way for it to be valued properly. So, you
Well,
know,
well, I got to play devil's advocate on that, Antoine, because here we have the dollar, the American dollar,
yep,
that used to be backed by gold, that's no longer backed by anything.
yep,
So, what's the difference between that
yes.
and the Bitcoin? I just want to hear
Difference
what
is
your
that
answer
the
is. And once
American
again,
dollar,
people, please share the link so that, if you have questions, so that your friends, your family members can ask questions about finances. We definitely want to know that. But, it's the same thing. The
here's the
American
difference.
dollar isn't backed by anything right now.
Here's the difference. The American dollar is backed by the full faith and credit of the U.S. government. Bitcoin is backed by who?
Okay.
Okay,
Okay, that's a
that's the
good
difference.
answer. That's a good answer. So you saying the American dollar is backed by the military of the American government, pretty much, because that's what
that too, that too. The
that's the
full
muscle
faith and
right there. You know what I mean?
yes, and that's the proper terminology that we use. We say it's backed by the full faith and credit of the U.S. Government, and so
Hmm.
um, that's one of the reasons why the U.S. dollar is the currency of the preferred currency of trade around the world.
Hmm.
We happen to have our own printing machine, right or wrong, we have one. Um,
Yes.
and that causes all kinds of inflationary issues. It causes all kinds of problems. A lot of debt that we have on our balance sheets now as a country. So there's a downside to that. But that is one of the primary differences. The primary difference between Bitcoin and the American dollar is that the American dollar is backed by the full faith and credit of the U.S. government.
Yeah. Now Sonya says she don't even trust the banks anymore. Sonya,
Good.
I'm with you. I ain't never trust the banks.
Now, and here's what's good about Sonia's comment.
Hmm.
Don't trust the banks, which is fine. But do what banks do. Create your own banking system. And that's one of the things that I teach my clients how to do. I
Hmm.
teach them how to become their own banker, how to make money the same way banks do, how to borrow money and make money off of your own loans, how to have your dollar make more money for you. So that's
Hmm.
another conversation that we'll get into. But for those of you who are listening and you want to know more, just reach out to me, and we
What's your
can start.
website?
They can go to stop like stop sign stop401k.com. They can go to stop401k.com, leave their name and email address. I will respond and get back to you.
Yeah, that's good, man. So yeah, Sonya Price says good stuff. So yeah, that's what I'm saying. I mean, so how would they set up their own banking system or their own, would you do
Well,
that through insurance? Would you do that through other methods? Like,
there's
you
there,
know,
there are a number of ways to do that, and it just depends on the individual. One of the things that I like to do with my clients, first and foremost, is to do what's called a kitchen capital report. And what the kitchen capital report does
hmm
is it allows people to figure out how much life insurance they can handle, how much house they can afford. And when we get into the area of life insurance, one of the things that is really, really interesting is that there's different types of life insurance policies out there. Each one works
hmm
differently. Some of them will not perform as advertised. Some are better than others. And so it's very, very important that you understand how these policies actually work. For instance, right now, there's a conversation going on about what's called an index universal life policy versus a
hmm
whole life policy or a universal life policy or a variable life policy. These are all cash value policies. Unfortunately, the way that one in particular, the index universal life policy is being sold, it is being sold as a place for people to do a lot of withdrawals from that policy. And unfortunately, the way that policy is set up, the loan, the clauses in the loan contract itself, which is variable, it goes up and down, et cetera, that can cause a problem for somebody in the back end. I prefer that if someone's going to be using a life insurance policy, that they use a whole life policy from a mutual company and versus a stock company. And that's another conversation as well. So,
hmm
and then when you are going to buy a life insurance policy, a whole life policy or a universal life or whatever it is, most people do not know how to figure out how much of their dollar, let's say you're putting in $200 a month, how much of that $200 a month goes towards cost and how much of that $200 a month goes towards your savings account. And that number changes every single year. So that's something to think about. The other issue is when we think about term insurance. Term insurance is great. It's fine. There's a concept of buy term and invest a difference versus a whole life insurance. That's another conversation. And I actually sit down and talk with each individual to see which is best for them. Because sometimes
hmm
buy term and invest a difference can actually cost you more than the whole life. And the
hmm
only way for you to know that is to actually to run the numbers. And I have proprietary software that I created to do just that. Because remember, I'm a forensic investment analyst, so I don't have a dog in the fight. I want to know from a cost benefit perspective, which is going to be better for my client, the whole life or the buy term and invest a difference. And with buy term and invest a difference, there are three costs. There is the premium that you pay, there is the invested difference between the whole life and the term, and then there are the fees inside of your IRA or 401k or wherever you put in that money. So when you
hmm
add up those three costs, those costs can be greater than the cost of the whole life insurance. And people don't realize that. So there's a lot of emotion that goes into um, people who are saying, well, I only want to have term. I only want to have term. Well, that's fine. No problem. What are you trying to do with the term? Are you trying to replace your income? Is this for a short-term need? Is this for a buy-sell agreement? Are you doing because you have a business and you have a partner? What are you trying to accomplish? So I always tell my clients this: there's no such thing as a bad product. There's only what's suitable and unsuitable for you, and you have to figure out what's best for you. Because what may
hmm
be good for Rick Mathis may not be good for Antoine Orr. Just all depends.
hmm So Sonia says whole no, term yes, index no. Now, with me, I would look at that and say I would I have my money more so in whole life insurance than term. Like I have a term life policy, I have a whole life insurance policy. But the term life insurance policy really is just for burial purposes. Like the whole life insurance policy, I look at that as an investment, and I'm still learning, so I gotta take some Antoine's classes, but that's just kind of how I see it. What's
Well,
your thoughts on that?
yeah, so the word investment. Whole life is not an investment, it's a savings vehicle. Remember, we just talked about the difference between savings and investing because with whole life, your money is guaranteed, the savings portion. So that's number one. Number
Mm-hmm.
two, when it comes to um, whether term is better than the whole life, and it's only just for burial. So there's actual burial insurance policies that you can buy, and those burial insurance policies maybe have a maximum of $10,000 or $15,000 in death benefit, enough to bury you. Term insurance really isn't burial insurance; it's really income replacement insurance. So if you're looking at trying to replace your income for a loved one or for a business partner for 6, 7, 8 years after you're gone, that's what term insurance does. So if you're making $100,000 a year and you want to say, you know what, I need to make sure that my loved ones or my business partner has the same income that I was bringing to the table for another 5,
Mm-hmm.
6, 7, 8 years, that means I need $800,000 worth of life insurance. So that is what you want to do.
Got it, got it. So remember, people, please share the link to invite other people in. I see Rashard Clark just joined in up in Jersey, man. What's cracking up there in Jersey? So share the link, man, so y'all can chime in, y'all can ask questions. Got a very smart man on the line, Antoine Orr, financial forensic analyst. That's a fancy title. So you got to know something. So that's what we'll be doing every Tuesday at 8 o'clock. We're going to allow people to chime in, ask questions about finance, about the money. I know, Rashad, you up there dealing in the real estate, man. So I know you might have some questions, you know what I'm saying, about real estate. So that's what we're allowing people to do, man, with this Facebook Live commentary that we're going to be bringing to you each and every Tuesday. So Sonia says the problem is that we are dependent on the agent to lead us in the right direction on life insurance instead of a financial advisor. And I totally, totally agree with that. I know you have, several stories where you've talked to some of the financial advisors, but they still, kind of clueless and missing out on some of the points, man. Share, a story or two about that.
So I want people to remember that whether it's an insurance agent or a financial advisor, they're salespeople. End of story. So take the word financial advisor, take the word advisor out and replace it with salesperson. That will put everything into proper context. So
Mm.
they are all trying to sell a product. Nothing wrong with that. That's their job. You as a consumer should never ever go to either one of them, the insurance agent or the financial salesperson, and say, tell me what to do. You should never trust them. In my first book I wrote, Inside the Huddle, inside the introduction, I said you should trust no one with your money, not even yours truly. Because when you trust someone with your money, you can trust that they are going to build their wealth off of your financial illiteracy.
Mm.
Okay? So you really have to go back to sit down and take time to learn. Think about this for a minute, Rick. People spend more time planning their vacations than they do trying to learn how a 401k works, an insurance policy works, or an annuity works. They just don't do it. And this is the problem. And then when we get into these products and they don't perform as we expect them to perform, then we get upset. So you have to manage your expectations on the front end. Don't worry about how high can this thing go. Worry about the downside. How low can this thing go? What happens if it doesn't work out as planned? Am I still going to be all right? The answer is no. Then you're going to need to make some adjustments. So this is, we sometimes put the cart before the horse in finance. We have to start doing first things first.
Got to protect the money, baby.
Will be good.
So we got to protect the money. So once again, we're here with Antoine Orr and myself, Rick Mathis. And what we're doing is we're having money talks, allowing people to chime in, ask questions about money. Believe it or not, Antoine, these 30 minutes has almost gone by. We're only going to do 30 minutes. We don't want to be on here long. So we're going to wrap up in about 5 minutes. So if you have any other questions, you could get them in real quick before we wrap up. I know Sharika Harvey. What up, girl? Sharika, how you doing? You say manage your expectations on the front end. She say love it. Awesome. So that was a good point, Antoine. So you
Thanks.
manage it on the front end, it'll take care of itself on the back end. That's a good
Absolutely.
point. So tell the people a little bit about how they can get in touch with you. Other things you have coming up when you'll be in Atlanta. I know you're coming to Atlanta soon. You got a couple events coming up here in Atlanta. We got events coming up in Maryland and other places as well. So just tell people how they can reach out to you and contact you.
The best thing for you to do is to go to stop, S-T-O-P 401k, just like a stop sign, stop401k.com. Go there. There is a finance blog at the top right-hand side. A number of articles are there. That's where you really want to start to go to learn information. There's a video library there as well. Go there and immerse yourself. Take the time to read, learn. They say, the best way to keep something, from our people is to put it into a book, because we know we don't read, right? Well, if you want to get ahead, you're going to have to start reading. Take the time to do that. So I've laid out a number of good information, a great place for you to start at stop401k.com. And if you put your information in there, I will respond to you.
Good. So Antoine, if you can, Sharika just asked if you can post your information, like type it in the comments so people can see it. Right on your phone there. If you go to the comments, then you can type it in, and
Yeah, but my
people are
phone's going to move if I do that, so I don't want to move the phone.
Well, we're getting ready to close up in a second, so we only have what? Let me look at the time. We only have 2 more minutes left. So you can go ahead and type it in, and let the people know how they can reach you. Once again, this is Antoine Orr with Stop 401k. We'll be doing this every Tuesday at 8 o'clock. So come with your questions. Matter of fact, invite other people in, that may have just inherited, 50,000, 100,000, and they want to know what to do with it. You know what I'm saying? Invite those people in so they can listen, and know how to protect their money. Because a lot of people focus their time on making the money. Very few people focus their time on protecting the money once they get it, and that's
And let's
more.
talk about those athletes as well. If you know
Yeah,
any
exactly.
professional athlete, they need to be
Hmm.
on here, because I can tell you, I've worked with them. I know the stories behind them. We can do better. And it's just a matter
Exactly.
of just getting the proper education.
Exactly. We got to do better, man. We got a guy named 45 in office right now. He ain't playing. He ain't taking no punches. He ain't holding nothing back. You know what I'm saying? So, it's important that we get our money back. We get our money right. You know what I'm saying? That we have our back. And, we keep this thing going, man, because that's what time it is. It's about leaving a legacy for the next generation. That's what we talk about in the film Black Friday. That's what Antoine is all about. That's what we're talking about in the Kids Money Book. The Kids Money Book will be out this week. So, we got a lot of exciting things on the horizon. So join us again next Tuesday at 8 o'clock right here on Facebook Live, where we allow you, the public, the people, to ask questions about money, about finance, about what we're doing. So any closing remarks, Antoine, before we sign off?
I want everybody to share this information with all your friends, like Rick has said. Make a
Hmm.
list of all the people that you know and have them to visit the stop401k.com, and to have them also come on the Facebook Live on Tuesday nights at 8 o'clock. This needs to be part of a movement. This is not just a
Yes.
one and done. This is a movement. So let's make it happen.
Yeah, like we say with Black Friday, this is not just a movie, it's a movement, baby. So we signing off, Rick Mathis, Antoine Orr. We'll see you next Tuesday at 8 o'clock right here. Money Talks Live.
Love you, family.
All right.